all perspectives. So when there's a lack of clarity, it gives scope for them to come and demand taxes, try to increase their revenue, and try to make their demands bigger. So that is a well-known fact to majority of the participants over here. Now, is the issue under the real estate sector is resolved under the GST when compared to the pre-GST regime? Either it may be under the VAT regime or in the context of the service tax regime. To answer that question, presently there is no clarity. Anytime when the government tries to come out and give some clarity, they create a newer confusion, which will lead to a lot of issues and again a new interpretation problem and new problem, departmental investigation, inquiries, etc., etc., etc. Having said this, I would like to take you through the presentation and also the way we look at this entire transaction of plotted development and GST applicability. Firstly, the overview, the agenda, what we are planning to cover is what is the plotted development, how does this operate, what are all the transactions involved in this, and what is the taxation of those individual elements of the total transaction, what would be whether the benefit of input tax can be availed, and unresolved issues which are there, which we can take up and discuss from our side as well as in the open session. Coming to the first thing, what is this plotted development? Why we always try to separate or look at it different from whatever the complex is. The plotted development can also be construed as a complex is another issue which is going on across. If we refer to the Real Estate Development Act or the RERA provisions, there, if we carefully look at it, there is a clear demarcation which is made as to the apartments and the plots. So the plots or a plotted development is different from the residential complex development is what we can understand from that. Further to that, if we also look at those definitions, it says the development of a land into plots and residential construction on the same. So effectively, plotted development is a one stage. Further, if somebody wants to construct independent houses, will construct on it. Sometimes a composite and a comprehensive coverage of both in a one shot can also be a sort of approvals which can be taken. Now, with this background, let's move on to the concept of this plotted development under the joint development arrangement or a JDA, which is commonly understood to be. See, if I have to explain the transaction, there is a landowner, there's a developer who is coming in. So, who will engage the development of the land. So, basically, landowner wanted to develop his land. He will engage the developer to develop the land, where the developer is going to develop the lands into plots. Then what happens? The land is bifurcated into various, plots, and out of the developed plots, there will be a sharing which is going to be between, landowner what all the sites which will be taken by the landowner, which all the sites will be taken over by the developer, will be agreed, and that will be done through a sharing agreement or a amendment to the joint agreement. Then after having got their respective shares, the landowner is going to sell his portion of the sites. Similarly, developer is also going to sell his portion of sites to the end customer. So, whereas the one, some of them which are belonging to landowner, he sells, developer sells. these transactions, if we have to look at it, what are all the elements of supply which are involved? In the first stage, when it is said that the landowner gives his land for a development, is there any supply? In a common understanding, generally we will not see that any service is said to have been given by the landowner to the developer. But however, the lawmakers are envisaging, I'm using the word envisaging, one type of supply which is said to have been there between the landowner to the developer. I repeat, there is a supply from the landowner to the developer. What is that nature of supply, or what is that which is getting transferred or being given? It is a right of development of the land into sites or a plots. Can that be said to be a supply is a question of debate, which as of now is not been so clearly set out by any judicial precedents. On the other hand, left, right, center, the government clarifications, government departmental's action, the notification wordings are coming out clearly to envisage your understanding that there is a supply which is called as development right, which is getting transferred when there is a joint development agreement entered into by the landowner to the developer, and that right is getting transferred from the landowner to the developer. Now, various challenges do come on this, which we'll talk about that a little later. But firstly, as to the levy is concerned, there should be a supply of goods or services for a consideration in the course of furtherance of business. Let's examine each of these elements, whether it is fulfilled in this context or not. From the landowner's perspective, is there a assuming that this development of right is can be called, not assuming. The question is whether this so-called right, which is being transferred from the landowner to the developer, can be called as goods or service. The definition of goods, which we commonly understand, movable, etc., whereas service is defined to be anything other than goods. So now the question which comes up is, when the statute is using the word anything, can it include even an immovable property? Because all along our understanding pre-GST was there was a levy of a tax on the goods, there's a levy of a tax on a service. Service is not only intangible, but obviously it was not so extended to cover any immovable property. Now, under the GST law, the question is whether whatever the so-called right is being considered as, can it be considered as a service because it's not a goods? Again, there are divergent views on it, but the government is clear that it is in the nature of service and it would be liable for tax. One more question which comes up is, okay, it is a service and there's a consideration. Is there a consideration when it comes? Again, the developer is going to give in exchange of that some portion of the right which is being given. In turn, the development activity is being carried out for and in favor of the landowner, which is nothing but a non-monetary consideration. So there exists a consideration. Now, the next question is whether the activity of the landowner of giving his land for developmental purposes for the future sale to the developer, can it be said to be in the course or furtherance of a business? With the definition under the GST law, which is very wide, probably very difficult to get out of it and say, I am not engaged in the business. So obviously that condition can be said to be fulfilled. So in overall, except for the fact that this activity of me giving him a right to come and develop for me, can it be called as transfer of development right? First, second, even if it is so, then whether it can be called as a service at all is a too elementary aspect, which is still having a doubt, which requires lot of debate and lot of water is yet to flow under the bridge to get the issue settled. Probably the High Court or future Supreme Court, this matter surely, in my opinion, is going to land before the Supreme Court and has to come out. The legal profession has to come out there only as say whether it can be called as a taxable element at all. Why I'm emphasizing so much on this is now, especially up to April 19, nobody in the industry thought that this activity can be taxable. Though some indication came to be in the statute book effective from 25th January 2018, but prior to that, definitely no such taxability was spoken about at all. So the majority cases, these activities would have been not treated as a taxable activity and taxes would have not been paid. So there would be a lot of litigation which is going to come up. That is where I am giving up a couple of points which you can look at it to see how you can defend yourself by these legal propositions. Then comes the developer. Developer will develop the entire layout for the landowner and for which he is going to get in the form of a consideration certain developed layout. In fact, where we are saying developer to landowner will allot, but actually allocation is because the plan will be designed by the developer, so he allocates which will be there. Generally, as a practice, there will be something called as an allocation agreement or a sharing agreement or a supplementary agreement, wherein consequent to the percentage which would have been spoken in the joint development agreement, they will be based on the plan approval. They will say, this is what is the site which I am going to, this belongs to you, this belongs to you. You can go ahead and in future, you can sell your portion of this. Again, this would raise a question whether the right of that particular plot is being transferred to a developer or by the developer allotment is done so that the allocation of the right to sell is given to the landowner. If so, whether the time of supply would get attracted then by virtue of a notification 4 of 2018 is a one matter of debate which exists as to what is the time of supply as far as this allocation. After 2019, not much of an issue, but before 2019, all the JDAs which were entered, as all these questions which will be coming up in the days to come. Landowner, after having got their thing, will sell the plots during the development, post-development. Same developer may also sell during the development, post-development. Again, post-development activities, it can, as per the Schedule 3, sale of land within course is outside the scope of GST. So hence, there will not be any tax on it. The question which comes up was when I enter into an agreement before the release order, before completion for sale of a plot and receive advances, and later on I go ahead and register those plot of land to the buyers, whether in such a scenario, will it be coming within the ambit of taxability or not, a question or a matter of debate which existed. In fact, the basis for this goes back to VAT regime, where in the context of the apartment construction, where they used to always take an argument. There is no works contract in case of the agreement to sell is entered by the developer to the buyers. Supreme Court in the larger bench has clearly ruled that any contract entered into before completion would be liable as a works contract. Though they said that, they also further said, however, any work which has happened before the uh, agreement entered between the developer and the prospective buyers will not be subject matter of a works contract. Let me emphasize at this point in time, the scope of levy of works contract was different. The scope of levy of GST is different. So GST is more emphasized on the aspect of the agreements entered into between the parties and the essence, with also an element of a composite supply and mixed supply concept being built in. So all this part looking into, in my understanding, my personal view is that the Supreme Court decision of L&T cannot be straightaway adopted into the GST law. And also recently there has been an advance ruling. I think Venu, after this slide, is going to take over and explain that in detail. There, in fact, they refer to the definition of a sale to the Transfer of Immovable Property Act and try to explain that sale is will include not only the full consideration being paid, even part consideration paid or agreed to pay will also be considered as a sale. So in such a scenario, advances received for a future sale of a plot would be not liable to GST has been clarified. Essentially, the circular 177, right, with the advance ruling, which Venu is going to explain in further detail, the last two, that is land owned to customer and developed to customer, is clearly outside the scope of GST net. There's no doubt at all. But if there's any doubt, that will be on the first three rows, which is what we need to debate and understand. Venu, over to you. You can take over. And if anything which I want to pitch in, I will pitch in and add my points.
Sure, sir. Thank you very much. And is my voice is clear, right?
Yeah, when your voice is clear.
Okay, great. Thank you. So the points which Rajesh sir has mentioned in this slide, in fact, sir has concluded all the aspects, but in the benefit of others and my own benefit, I have further split it in activity wise so that we can actually look into and take questions in each activity, what happens. Let's look at the first one, where the landowner is engaging the developer to develop the plot. The point Rajesh sir has mentioned is a right to develop the land into the layout has been given by the landowner to the developer. The question that comes is it a supply? So allowing someone to come into my land and do some activity, and for the in doing so, I am getting some plots. Now, very difficult to say that, okay, there is no supply, or even if there is a supply, what supply is there, right? So that is a question that has to be asked. Now, there is a concept of development rights, 5/2019, where the development rights have to be paid by the developer under reverse charge cases. Now, the new notification which talked about the development right, this notification which talked about development right, did it talk about an apartment construction or even plotted development? There is a common argument that comes up is the definition of the project which is referred to in the new notifications is referred to RERA. And in RERA, we talk about the project means either it could be construction of apartments or a layout development. And in the plotted development, we are talking today, the plotted development is envisaged as a project under the RERA. Okay, having said that, that being a project which is definitely there in the RERA. So is the landowner giving away any development right? Personally, I feel the land always have bundle of rights. One of the right is development. The landowner is allowing the builder, to develop the land into layouts, which means a multiple plots are getting built on each of the individual land. There is a further development of apartments that would still happen. That means some activity which is happening on the land, but the development right, in my view, is not given away. Nextly, is the activity of giving a right by the landowner to the developer, would it be the same supply envisaged? With the new notification, after 3/2019, there is no levy to the landowner at all in any of the activities. And if at all there is a levy, there is an input tax credit, and there will be a credit accruing to him, and it will only be on the incremental. For plotted development, would it be applicable? Again, in my view, in case of a plotted development, that would not be applicable. So the activity which landowner, which is allowing the developer to come and have a activity of development, there wouldn't be a supply in my view. Now, what is the developer doing? He is doing some development activities. So what is he doing? He is developing whole of the land into layout. So he is now bringing lot of his technology, his material, his expertise, and his also wisdom, how well the layout should be formed, what size the plots should be. There would be civic sites there, and his ability to go to the respective authorities and get the permission done from the, let me just share this. Yeah. So his ability to convince the authorities, get the layout sanction, all those things. Now, he is actually stepping into the shoes of an external contractor. It's not, it could be an area sharing, revenue sharing, or a landowner gives an outright contractor to do the develop of this. In any of these arrangements that have happened, all that we should know is the developer is providing services to the landowner. So the activities the developer is doing, is it a supply under GST? Very well, a supply under GST. Is it a works contract or a construction service? That's also an important. Should it be treated as a works contract or a construction services? Again, HSN 9954. If you get into the subcode, there's a detailed layout site formation. We have detailed thing. So he is undertaking the construction service of developing the layout. GST applicable very much. What is the time and value of supply? This being a continuous supply as envisaged under the continuous supply of services, the supply can be timed in as and when the supply is being provided. Now, we also have a notification other than 3/2019 series 4/2018, where in case of these activities, the time of supply could be deferred to project completion and once identification of the area sharing. If it is a lump sum contract given to an individual contractor, the landowner would be paying the money to the contractor on periodical payments. As and when the payments are received or due, the developer will be paying the taxes. But if it is an area sharing, once the layout is completed, area sharing has been identified or allocated, the levy would come. But definitely GST would be applicable at those respective times. And the question that comes is, on what value? Here I would request Rajesh sir to pitch in and add, but the valuation is going to be the litigation aspect in this. If the landowner, so let me move to the next slide, when this allotment is happening. So the developer has identified some plots and handed over to the landowner, saying that see, these generally some 60-70% of the plots goes to the landowner, 30-40% of the plots be with the developer. Now, the landowner is getting these plots. What does the developer is getting? He is getting 30% of the plots that have been developed. He is getting it. The activity which he has done is an activity of construction services 9954. Definitely leviable to tax. At what value comes the question? Given that an explicit works contract where the landowner has engaged a developer saying that you develop, risk and reward is mine, I will sell it at whatever price, I will get the RERA approval. So there is a definitive amount which the landowner is agreeing and willing to pay to the developer, and GST is applicable on that. Will he get an input tax credit for the works which he is doing? Absolutely yes. The levy is at 18% and he gets the input tax credit for doing the various activities. But now in doing these activities, now again the people also ask this question, should this be at 5% under 3/2019? In my view, it is not the 5% at 3/2019. It would be at 18%. Now, the developer has to levy on the actual amount received. But what if it is a joint development where, and which is most of the time, any activity on the real estate is a joint development wherein the landowner would express his inability to construct and do some activities, and he would give that all the activities which are to be done, he will say, let the landowner take care of, the builder take care of it. Let the builder take care how much to pay, what to pay, whom to pay, where to get approval. All the headache will be of the builder. I will provide the land. I am willing to forego some portion of the land. That is what generally happens in the joint development. In fact, to the next level, I will not even sell. Let him only sell and share me the revenue proceeds. Even those arrangements that happen. So in this situation, what is the developer getting? Developer is not getting the absolute money. He is getting a piece of land, a parcel of land, 30% of the developed layouts. Let's say he is getting some 10 sites in the whole of it, whatever. According to me, the value on which the developer has to discharge the GST is the open market value of those. The question that comes is, how can the open market value of those sites determine my taxation? That is one litigation area, because since the value is not available, I have to go to valuation rules. Rule 27, 28 will not be applicable, not related party. 29 may not be applicable. I am not in the principal agent, either as 27 or rule 30, 31. What does this rule says? These rule says, if you do not have a consideration, find out the open market value. Now, let's say I am the developer and you are the landowner. I have done some activity to you. You have given the land to me. Can I equate? Now, the work which I have done is maybe worth 100 rupees. The plots that you have given me worth 200 rupees, or let's say 150 for the ease of it. Can I equate my 100 and 150 as the same? Now, you may say that since the market value of those lands is 150, it is the value of the same service that I have provided. Ideally, in my view, the value should be, to determine my value, the activity I have done, that should be valued, not the value that I have received. See, I have received, that is easily available. The plots that I have got easily available. The SR rate or the guideline value of those plots easily available. Adopting those values on a conservative basis would be right. So that is a value easily available cannot be questioned. On the other side, I would say whatever the cost that I have incurred in doing that activity, plus a markup of 10%, though, which is again, I'm not referring to Rule 28 explicitly, could also be another guidance value saying that, okay, yes, this is the fair market value. If he is not doing any plot, if he is not giving me the plots, I would have given him at this price. Now, the value of the plots could be higher. Now, I may argue saying that, see, the plots have its own ability, the chance of it getting sold now, there is a risk. There is a flex time value of the money. I might not sell all the plots now. It has a time of it. I have delivered my services now. So even that aspect to be seen. So in terms of the valuation, this is one area of litigation. Rajesh sir, anything you want to add here before I move to the next activity? Okay, seems Rajesh sir is away. We'll take it up once he's back.
Sorry, Venu, can you just repeat? Sorry.
Yeah. So in terms of the valuation of the developer to the landowner, so I was suggesting the value of the plots that has been received by the developer is one aspect to look at. On a conservative basis, you can adopt that because that value is available, but more right or a practical to be there, whatever the cost that the developer has incurred, a margin to that will be the open value of the service which the developer has provided to the landowner, is what I'm trying to say.
Yeah, actually, statutorily speaking, it says that if you have a same type of services being provided by you to somebody else for a consideration, not in a non-monetary consideration, you can adopt. But in case of a plotted development, unlike merely a construction contract, there will be a lot of other work which are involved, including licensing, running to the department, getting approvals, managing the surrounding properties, getting the whatever the other issues sorted out. So it is uncomparable. So therefore, the first element is gone. Second thing is where you know that what you're going to get on the date of that agreement, or what you're going to get, and that what you're going to get, that value is available, then we have to adopt that. We have no choice. But invariably, the what you're going to get will be a land which is going to be in a future date, and what is the value of that is not known. So hence, even that is ruled out. So the next remaining thing will be only residuary provision, which is what you are mentioning, that cost plus 10%, which you adopt. I think that would be a safe route to go. Otherwise, of which unnecessarily, because the other person, the landowner, is not eligible to take input tax credit. So obviously, he will be not willing to pay 1 rupee extra than what is. So optimal position will be cost plus 10%. To my experience, department is also accepting this proposition in majority of the cases.
Right. So in fact, someone was asking about cost plus 10%. In fact, Omar has messaged me this question saying that if we do cost plus 10%, that is rule 30. Since after rule 27, if I can't do it, I can't go 28, 29, I'm jumping to rule 30. So the cost plus 10% is adopted. Then what is the value on which I have to do? Let's say out of 100 plots, 70 plots are going to the landowner, 30 plots are remaining with me. Since 30 plots are remaining with me, can I say cost attributable to 70 only I will give, because that is the portion of the service that I have given? My answer to it would be no. My answer to it would be no. I have developed on the whole layout. I have done the work on the whole layout. In lieu of the consideration that I have to get from the landowner, I got 30% of the plots to me. I got 30% of the plots. So which means, had this 30% which was there in the cash, I would have, my work would have been valued for the 100% of the layout. So we cannot say the plots which have been retained by the developer, he has done work on himself. The answer is no. He has received these plots in lieu of the work that he has done. So the cost to be adopted is 100% and not on the 70%. Rajesh sir, is that okay?
Yeah.
All right. So then let's go to the next aspect where the allotment of the plots which have been done to the landowner and landowner is selling them. He can sell the moment a JD is done, the project is launched. He can sell during the course of the layout formation. He can sell after the completion of the layout, any given point of time. A question that comes up is this an activity of Schedule 3? Is this an activity of Schedule 3? And is GST applicable, is like the serial number 3 of 11/2017, which talks like 3/2019 notification, is the serial number 3. Is the GST applicable? In my view, when the plots are sold, imagine that bigger layout. The bigger layout, hypothetically, around 45% of that layout is cut in the form of roads, in the form of gardens, in the form of something which is community sites, something that has to be relinquished to the government. And it's a condition that I have to do this activity, make it as a layout and give. Of course, it is state specific. What am I selling to the end customer? And the answer which I'm explaining here, it would be applicable to the landowner, or if the plots that have been sold by the developer, like plots that are being sold by the developer, plots that are being sold by the landowner. I'm now answering to the next leg of the question. The earlier leg was we discussed about the development which the developer has done, and that is to the landowner. Now that is during the course of the development that has happened. Now we are talking about the developer did not get the money from the landowner, he got the money from the customers. We are talking about when that money from the customers have come, whether the tax is applicable. For the money he did not even get, we have said that there is a tax liability, he has to pay the tax, everything, valuation, time of supply, rate of tax, we have seen. But the monies that both the landowner and the developer is getting, applicability of the GST could be at the project launch date, during the course of construction, post construction. In all the three places, what is the developer selling or the landowner selling? Landowner is selling a piece of plot, 30/40, 40/60, 100/100, some sites here they are selling. In a normal course, is like if that was not a developed layout, the cost of that land could be 1,000 rupees per square feet. Because now some big builders like Mantri developer, Shobha developer, Prestige, whatever the big developers has put up their board, they are developing the layout. The customer is assured they have done the legal work. It is litigation free. They have done the proper road, so the proper width, everything is there. There is a good space for living, breathing, and everything. And there is a quality of that. And I will never in my life be able to build a road around me, transformer, or the underlying drainage system. All that, nothing I can do. This is the work they have done. Very much the buyer knows that the money he is paying is including all these works they have done. So when the landowner and the builder they are selling, they have also including these activities in the cost of the price of that land. They are including that in the cost of the pricing of the land. Now, what are they selling? They are selling the 30/40 plot. Are they selling this road? The answer is no. Are they selling the underlying drainage system? The answer is no. They are indirectly recovering whatever the works contract activity which they have done. If they have to do this activity independently to each of the home buyers or that layout property plot buyers, it is a chargeable activity under GST. But now this got bundled in the name of the land. This got bundled in the name of the land and they are selling the land. When this plot is being sold, in my view, this is an activity of Schedule 3, Entry 5, which is sale of land, which will be outside the purview of GST. GST cannot be levied because that 30 by 40, which was costing 1,000 rupees square feet, now it is sold at 2,500 square feet. So there is an inherent value in it. Yes, I agree, there is an inherent value to it. But what is sold is the plot, and hence there cannot be taxation on this. Now there are builders in multiple categories, which people, there are multiple type of choices they have taken. As Rajesh sir rightly said at the beginning, this area is not free from litigation and it has to travel to Supreme Court and get it settled. There are one set of builders who are treating this whole activity part of 3/2019, where they are taking on the whole consideration that is being received, taking 1/3 abatement and levying a tax of 5%. That's one end of the spectrum of the builders. The other end of the spectrum of the builders is it's a Schedule 3. There's no levy, not paying tax. And I'm only a little worried about the in-between builders who says, okay, out of 2,500 rupees, I will be mentioning 500 rupees development charges. I will collect 18%, 2,000 rupees, it is sale of land. So no GST. Now we have a Gujarat High Court decision, Munish Munjal Bhatt case, where the Gujarat High Court said, wherever in a contract, the value of the land is clearly identifiable, 1/3 abatement can be, 1/3 abatement need not be adopted, and you can adopt the actual land value. Now that's the only case law which is of rescue to them. In my view, after the GST coming in, 1/3 cannot be considered, 1/3 cannot be disregarded, because the entry has come in with the power of 15 subsection 5, where the government has power to deem something as a value. It's like they have in terms of, say, solar EPC contract, they said 70% to goods sometimes or 40% sometimes, but there is a deeming fiction they brought in. Likewise, in case of a plotted development, they brought in a deeming fiction. When the deeming fiction comes in, we have to accept that value. So I have my own doubt, ability to win the case and their ability to avail the ITC. The question that comes is, since we are saying these are sale of plots and which is Schedule 3 outside the levy, can at all there be an input tax credit? The answer is still yes. Because what we are saying is, the builder, when he is paying the taxes, the developer, when he is paying the taxes, he is paying the taxes one leg before, even before the layout formation, he is paying taxes on the development, able to tax at the rate of 18%. So he gets the GST for it. So what are the costs which are attributable in this activity? The costs which are relating to marketing of an unit, the costs that are attributable to market a unit, the marketing costs or the project management consultants, the outsourcing, pamphlets, advertisement, all these are costs that are there in marketing of the plots. These costs will not form part of the layout cost plus 10%. And these costs, wherever the input tax credit is there, it is not eligible because it's an activity pertaining to Schedule 3, where there is no outside levy. Hence, there cannot be availment of input tax credit on this. So any questions to participants at this point? And Rajesh sir, anything you want to add?
No, you can go ahead. Nothing. The litigation part I'll add later.
Okay. Yeah. So when if this activity is done by the landowner himself, engaging a third party, there is no change in my answers. Whether it is done by through a third party or when it is done by himself, there is no change in my answer. When the landowner is engaging a third party and on a principal to principal basis, he is paying a lump sum money to the developer, and the developer is going to charge the works contract bill, and this landowner will be selling the plots to the end customer during the course of construction and after the layout. Again, it will be grossly schedule 3, doesn't fit under serial number 3 of 11/2017. There cannot be levy in my view. There are other matters that will flare up to the litigation, where most of the times when the layouts are formed to have a quick sale that happens, sometimes this plotted during the further plotted developments, the developers on the plot of, let's say, 30-40 site, they will go ahead and develop a house also. They will construct a house, model flat, or they will make an announcement saying that for first 10 people who are booking the house construction, they would say that the apartments will get built, not apartment, the houses will get built at say 1,500 per SFT. Generally their cost of constructing, including marble and everything, sell 2,500, but he'll say 1,500 I will give. Today a good quality marble itself will cost us 400, 500 rupees, but they want to promote, they want to have more people coming up. Now, when the developer continues to do a further construction of plots on this and getting sold, how do we treat? In my view, in case of a plotted development, it cannot be treated as 3/2019. There are two separate contracts that happens, wherein the developer or the landowner will transfer the title of the land to the end customer. End customer has a right, to get that building be developed by the developer or by anyone. It is not a row housing, not a villa projects. It is two independent principal to principal contracts. So developer now has to charge like a works contract, where he has engaged a contract of constructing a building for that end customer, and he has to levy 18% on whatever is the value which he has agreed, say the 1,500 per square feet, he has to levy. Question that may come up is it may sometimes show up that, okay, it is under loss project. Is it permitted? In my view, under GST, if the value is free from any other additional consideration, if the monetary is the sole consideration, I can still have some businesses with loss. I am eligible to utilize the full ITC, even if I'm making something under loss. I will be levying the taxes at 18% for the home construction. And in this situation, how do I disclose these values? So in GSTR1 table 8, these are the activities of schedule 3, which is not a supply. You will be reporting under no supply. Again, in GSTR 3B, you will be reporting under no supply, and 5F in GSTR 9. Respectively, the values where you are not paying, you will be showing under that. Wherever you are paying the taxes, the plotted development to the end customers, most likely end customers, it will be table 7 of R9. To the landowner, he might want to, if he has registered, it is as B2B, otherwise also it is B2C. Generally, most landowners are not registered. Even if the landowner is registered, he is not going to get any input tax credit on the levy which the builder has done, because this is not a furtherance of business. It will be, if he is kind of a subcontractor, he is also providing same 9954 outward, then he will get an input tax credit. But if it is for own account, till the Safari Retreat case, which is there in the Supreme Court, I have my own doubts on the case to be in the favor of SSC, but yeah, that is all judicial system. But still, since 17.5 subsection C, clause C and clause D have specifically restricted any credit of works contract, so there will not be any credit to the landowner nor to the end customers. Friends, these are the various things that we intend to discuss today on the plotted development. Any questions we are free to take. And Rajesh sir, anything you want to add?
just I think the presently debates which are going on, or the cases which are presently pending on these aspects of the real estate, especially concerning with the land, is one, whether the land value can be taxed into the GST, what should be the valuation of a land, whether notional value is acceptable or it has to be an actual, is a matter of debate, where the already a Gujarat High Court in Munjal by Manish Bhai case has given a favor. The value of a land cannot be on a notional basis when the actual values are available, and whatever that 1/3 and all those things in the context of the apartment being given is only an option, not a compulsion. Though that is not directly applicable for a plotted development, obviously in the context of this transfer of development right, etc., we can actually take a ratio out of it and say when the land value cannot, always this development right is the inferior right from the ownership of a land. So the value of a inferior right cannot go beyond the value of the complete right itself. So therefore, the land value, I mean, the right value cannot be equated to a value of a land, and many a times the methodology given is much more than the land value itself. I think that is something which is not appealable to any judiciary forum in the future days to come. So that is a strong view which you can always look at it. Coming to the next aspect which Venu was talking about, the plotted development project further continued into a residential development. Please be careful on a couple of aspects. Aspect number one, the way you have taken an approval under the RERA. What is the nature of project approval you have taken under the RERA? Many a times, your approval under the RERA will be only for a plotted development and not into a villa project. So that will give a more safer, safe defense for whatever Venu did mention about the concept which he explained. But however, you are marketing it and selling it as a villa and registering the project as a villa, and your approvals has been taken as a whole in the developer's name for the entire, in even though individual houses plan, but it is already taken and kept in advance with them, then I think maybe little difficult for you to take that stand. Maybe little of a jugglery you have to make with the department's litigation perspective. And coming to the next aspect of it, sometimes when you actually complete a land and you have for this construction itself, you can engage a separate entity, not the same entity, for coming in for pitching in for a construction of a houses in that particular thing. The conveyance of the land is made, then later on the construction agreement is entered into another entity, can be another safeguard which can be kept if you are so planning it accordingly. The next aspect to be noted is sometimes in the agreement to sell or a sale deed, there will be a clause which said if you are not entering into a construction agreement, there will be reconveyance of the land back to the developer. If such clauses are there, then again you need to be careful whether the stand which we are taking as a construction and availing a credit would be sustainable. These are some points I thought you have to keep in mind. Simply you cannot go and adopt certain things unless you look at it various other corresponding aspects and what would be the impact of that from all those angles as well. Venu, over to you.
Yeah, that's it, sir. I think we have covered all the aspects. Participants, if you have any questions, you can actually unmute yourself and ask, or you can put your questions in the chat. Couple of questions that have come to my chat window, I have answered them. But if there is something else in your view, you still have the doubt, feel free to ask.
Yes, participants, any questions? Please, please, you can unmute yourself, or you can, put the message in the message box.
Am I audible?
Yes, sir.
Yes,
you
sir.
are audible.
Yeah. So my question is like when you said landowner to the developer in case of JDA, then that will be a activity which will termed as a supply, and that is taxable.
Correct.
Correct. Landowner to customer,
Yes.
not taxable. Developer to customer, not taxable.
Right.
Correct. So in case of landowner to developer, if it is taxable, then the issue will be timing and valuation.
Right.
So the valuation, as you said, conservatively market value or cost plus 10%.
Correct.
And no need to pay under reverse charge mechanism, right, sir?
Yeah, it's a forward charge. Correct.
So, no, earlier in 3/2019, it was reverse charge, I feel.
No, reverse charge only for the development rights, but this we are talking about the forward, the construction services,
So
the
this is
services
not,
that the developer. Yes.
okay. So as
Mahavir, Mr.
Yeah.
Mahavir,
yeah,
even from the perspective of that notification of RCM, which is introduced even after 2019,
Yeah.
with regard to transfer of developmental right in a project to the promoter, if you read it carefully, it says for a construction. I think, Venu, if you have a notification entry, you can just validate my saying.
Yeah.
It uses a word for construction of a project,
Correct.
if I am not wrong. So
Correct.
that is the basis which is being taken to say the transfer of development right is for development of a project of a plotted development. Generally, the construction is used in the context of apartments, not with regard to the plots. Hence, the RCM is not applicable, is a one basis. Two, these notifications came along with all other aspects, changes which happened in only in the context of apartments, not with the context of the plotted development. That is also a basis on which it is being understood that this RCM is applicable only in the context of the complexes, residential or commercial apartments, but not in the context of the plots or plotted development. This is the basis of the understanding, Mr. Mahavir. Hope we answered your question.
Okay, so any other questions from the our attendees side?
Good evening to the host. This is Omar here. Sir, my
Yes.
thing is, see now, Rajesh sir explained it beautifully that TDR, I mean GST on TDR and RCM basis is still subject to a lot of this thing. Like there's no clarity on it. But however, if you want to err on the side of caution, if the developer discharges GST on RCM basis on the TDR, can he take a set off of that input against the liability which will arise to him because he's doing some construction service to the landowner? So net to net, is it tax neutral?
Answer the
Yeah.
question.
So yes, sir. Yes, sir. Go ahead.
Answer the question. You can
Oh,
answer.
you said no, you said answer. Okay. 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 Yeah. So as Omar rightly said that since it is the litigative, can I err on the side of the revenue? Now, if you look at it in a plotted development, if we go say cost plus 10% method, I have various costs that I have incurred, which I'll get input tax credit. Of course, maybe 80% of the costs have ITC, 20% of the costs do not have ITC. That means 30% of the cost I'll be paying through cash, and 70% of the cost I have the ITC. If I am paying for the development right under reverse charge, the question that comes up is I may also end up blocking my cash and working capital, which cannot be carried forward or utilized. The first question that comes up is whether at all that entry applicable. Again, in my view, that is not applicable, though it has been brought in at a bundle of those notifications. The biggest culprit for us in whole of this discussion is usage of the word project, which is linked to RERA. And from the RERA perspective, project means apartment construction and plotted development. in my view, the notification 3/2019 uses this condition that the developer should have paid under reverse charge, which is, if you see the entries on the left side, is construction of an apartment or a complex, and that is not applicable for the plotted development. So that is where Rajesh sir was saying that this development right entry will not be applicable for the plotted development. That would be my answer, Umar.
Yeah, addition to what Venu said, Mr. Umar, two more points I would like to emphasize on. When something which is not leviable to tax under RCM, but if you still pay a tax on that as RCM, your credit itself will be questionable, because definition of input tax as with regard to 9.3 and 9.4 uses the word payable and not paid, the input tax definition. So if it was not at all payable, but if you are wrongly paid, department can come out and say that your entire credit is incorrect. Point number one. Point number two, having taken that credit, entire credit is, though you take a credit proportionate to the area which you will be selling, will be block credit. Hence, again, that much will be adding to your cost. So now you have to take a call whether you want to take a risk and you are going to block that amount, or take a stand that I am not at all liable.
Thank you, sir. Another last question, sir. Section 9(4) apply to a developer who is doing plotted development? Section 9(4) RCM.
Pardon me, sir?
Under section 9(4) there is RCM, that is the 80% limit is there. Will it apply only for construction of apartments, or will it apply even for plotted development?
Okay. So this is for the benefit of the members. There is notification 7/2019 where the 9 subsection 4, where they brought in reverse charge for the unregistered purchase, which was earlier there. Again, this notification which has been brought in is in line with the entry with the 3/2019, which says that during the course of this construction, it is expected the minimum value of the goods or services which is required to be purchased by a promoter for a construction of project should be 80%, right? Again, in my view, it is applicable for the apartment construction. But in this situation of the plotted development, to be on the safer side, you can always ensure, even otherwise you will be getting the input tax credit for this. This is, you are doing a cost plus 10%. Here you can always pay reverse charge on this. This 9 subsection 4 will not be hit by the earlier statement which Rajesh sir has said, since you are paying for the unregistered purchases and not the notified RCM purchases.